These reports can move the US dollar and the stocks significantly. Gold had a volatile week, starting strong and reaching new heights before pulling back. It will be difficult for the US dollar to fall. Welcome back to the XChief channel. Here, Isaac Martinez, traded and analyzed, here to bring you the latest insights into the financial markets. Whether you are just starting or already trading, this channel is your go-to source for actionable strategies and analysis. Today we're diving into the key movements shaping the markets. Expect updates on the US dollar, global central bank decisions, and the unexpected shifts in the UK and European economies. Stay tuned because these insights could help you refine your next trading move. As you already know, we start always with the economic calendar, and don't forget that these hours are based on GMT -5. On Monday, December 16th, we start the week with PMI data for the Eurozone and the United States. At 2:15 a.m., France released its flash manufacturing PMI and flash services PMI. These reports measure business activity in manufacturing and services. Higher numbers indicate economic growth, while lower numbers indicate a slowdown. At 2:30 a.m., Germany follows with its flash manufacturing PMI and flash services PMI. Since Germany is the largest economy in the Eurozone, its performance often sets the tone for the Euro's movement. At 8:45 a.m., the US releases its flash manufacturing PMI and flash services PMI. These reports are closely watched as they give a real-time snapshot of the health of American businesses. Now we go on Tuesday, December 17th at 7:30 a.m. We have the core retail sales and retail sales report from the United States. Retail sales show the overall spending in stores, which reflects the consumer strength. Core retail sales exclude volatile items like cars and gasoline, offering a clearer picture of consumer spending trends. These reports can move the US dollar and the stocks significantly. On Wednesday, December 18th at 1 p.m., we have key events from the US Federal Reserve. First, the Federal Reserve funds rate will be announced, and this rate is the Fed's main tool to control inflation and support economic growth. Along with the rate decision, the FOMC economic projections will be released, showing the Fed's outlook for inflation, growth, and unemployment. The FOMC statement follows, summarizing the reasons behind their decisions. At 1:30 p.m., the FOMC press conference takes place. This is crucial because Fed chair comments often provide clues about future rate decisions, and markets can react sharply. On Thursday, December 19th at 7:30 a.m., the US publishes the final GDP for the last quarter. This measures the total value of goods and services produced in the economy. If GDP comes in stronger than expected, it signals economic growth and boosts confidence in the dollar and stocks. At the same time, the unemployment claims report is released. This measures the number of people applying for unemployment benefits for the first time. Lower claims signal a strong job market, while higher claims can indicate economic weakness. Finally, on Friday, December 20th at 7:30 a.m., we get the core PCE price index. This is the Fed's preferred measure of inflation. It tracks how prices are changing across the economy, excluding food and energy. Higher inflation increases the likelihood of future rate hikes, which impacts all financial markets. This week has a heavy focus on the Federal Reserve and PMI data, so keep an eye on how the markets react to these fundamentals, especially the Fed decision on Wednesday. And now let's start with the most important news of the week. Gold had a volatile week, starting strong and reaching new heights before pulling back due to higher than expected inflation data in the United States, and also a stronger dollar. The week began with gold at $2,633 per ounce, rallying to a peak of $2,726 on Thursday. The main driver of this rally was the news that China's central bank, the PBOC, resumed gold purchases after months of pause, which fueled optimism in the market. However, on Thursday, the US Producer Price Index report showed inflation rising more than expected. This data weighed on gold because higher inflation increases the chances of the Federal Reserve keeping interest rates higher for longer. When rates remain high, the dollar strengthens, which is negative for gold prices. By Friday, gold lost its momentum, breaking below the key support level of 2,676 and continuing its decline to close the week lower. A combination of dollar strength and profit-taking among traders contributed to this drop. Despite the pullback, gold's price hasn't fallen significantly. Consider that we were trading gold below the $2,000 mark not long ago. Looking ahead, market sentiment is mixed. Some analysts expect gold to continue correcting next week, while others believe prices will stabilize or even recover. Among retail traders, 60% remain bullish, anticipating a rebound. The key event to watch next week is the Federal Reserve's interest rate decision on Wednesday. While a 0.25% rate cut is expected, the real focus will be on Jerome Powell's comments regarding the future of monetary policy. Other important data to watch includes US retail sales on Tuesday and the PCE index on Friday, both crucial for gauging consumer behavior and inflation trends. And changing markets, let's talk about Forex. And that's because the US dollar had its best week in a month, driven by expectations that the Federal Reserve will cut rates slowly in 2025. The dollar index rose nearly 1%, reaching 107, while US data showed inflation and the job market cooling as expected. Markets see a December rate cut as certain, but further cuts could be delayed until March. Against the yen, the dollar hit 153.69. After reports that the Bank of Japan might pause on rate hikes, waiting for clearer wage growth data. Traders expect a BOJ poll to push the dollar-yen higher, while a surprise hike could strengthen the yen. In Europe, the British pound fell after the UK economy shrank 0.1% in October, signaling a deeper slowdown. The euro recovered slightly, while the Swiss franc remained weak following a surprise rate cut by Switzerland's central bank. Meanwhile, Canada's dollar hit a 4.5-year low due to rate cut expectations and US trade concerns, while China's yuan held steady amid reports of potential currency weakening to offset trade risks. Overall, the dollar remains strong as central bank policies and economic data drive investor sentiment globally. Now let's head into technical analysis of the DXY, the US dollar index, and as always, we need to know what happened before. So in the graphic, in the history of the US dollar index, we have seen that prices have been developing an upward trend. As you can see, higher highs, higher lows, and we can expect now that for the next week, a new higher high. That means that one of the main objectives for this week could see a breakout of the 107.186. We can also keep our other bullish targets at 107.566. Maybe one of the targets that the price wouldn't reach, but you need to take it into account. Maybe we could have a strong movement because of the fundamentals that will happen this week. I will leave you with this last bullish target at 108.071. That means that the US dollar index can increase its price to try to break out all of these barriers, all of these resistances the price is showing to you. On the other hand, if you are trying to be bearish with the US dollar, which is something that I wouldn't recommend, or I wouldn't, in my opinion, consider for this week, because we are seeing a clear and a strong upward movement and a strong upward trend, it will be difficult for the US dollar to fall. However, if you're considering, as I told you, bearish targets, maybe one of the bearish targets would be 106.354. You can also consider other lows, which would be in these places. Remember that these higher lows could also be used as liquidity, so the price could search for those, so the price could go for that liquidity before trying to do a new upward movement. Prices and also targets for the bearish people in this channel will be 106.040, 105.798 and 105.488, which is one of the objectives we had before. Now let's head into the SP 500. As you can see, we have established our last objective, which was the bullish target at 6,105. It wasn't the objective that we reached, maybe we will reach it for this week, but as I told you the last week, it's difficult for us to pick a long trade, to pick a buy trade with the SP 500, and that's because it is difficult to do a new upward movement that could be good for our risk management. So you need to stay focused with this information. If you're considering movements for this week, I will still trying to get the pullback to the 0.5, which is 5,976, 5,947, and also 5,905. It is likely for the price, before trying to do a new upward movement, to reach these targets, these bearish targets, so we can see a new upward movement that could be more organic for the SP 500. If you're trying to buy now the SP 500, or you are trying to buy contracts with the SP 500, just remember we are near the all-time highs, so it is highly possible to not get a good trade with those movements. Nevertheless, if you are considering to buy the SP 500, don't remember this objective, and also the next target. Very difficult to reach it, but the next target is $6,198. Let's go now with the euro dollar, one of the most important forex asset that I trade, and it is likely for the euro dollar to try to do an important movement this week, because we have a lot of fundamentals that can stimulate the euro dollar to make a movement. Right now, we don't have a clear movement or a clear trend with the euro dollar. If you do something like this, if you draw, you can see that we are consolidating with the euro dollar. As a humble opinion, I could say that it is not so intelligent to trade with the euro dollar, at least before we have one important breakout, and I could suggest you to consider the breakout of 1.06099 if you want to do buy trades with the euro dollar, and also you can consider the breakout of the 1.04251 if you are trying to be bearish with this asset. Before this, it is dangerous for you to trade the euro dollar. I won't make trades seeing that we are not breaking any of these targets that I told you before. So take this into account if you want to trade the euro dollar. Let's finish with Bitcoin, one of the assets that I trade the most. For Bitcoin this week, it is difficult for the price, as I told you last week, to keep pushing upward. So for this week, I will also try to get upward movements, try to trade those movements with contracts, but just remember that buying Bitcoin at these prices, it is really expensive. Maybe you can see better options if you are trying to make money with the cryptocurrencies, better options at altcoins. So don't forget that information, because if you are trying to get into Bitcoin and be millionaire, it's going to be difficult without having a lot of money. For now, Bitcoin USD, I will try to consider the important price of $100,000, psychological price of Bitcoin. Bitcoin could be retesting this zone before trying to go up and trying to break the last all-time high, which is located here at $104,000. Maybe for the next weeks, we could be consolidating with Bitcoin, just Bitcoin getting into a range before trying to do a new upward movement. However, as I always do, I will leave you with the key prices for Bitcoin, and I think one of the prices that Bitcoin should break is the $102,650, and the last one, obviously the all-time high at $104,000. If you are bearish with Bitcoins, let me leave you with this target at $99,220, and obviously this key level that we have established before, $94,550, and last bearish target at $92,000 for Bitcoin. To wrap up, the dollar remains as a powerhouse for the financial markets, with central bank policies and economic data continuing to drive momentum. Whether it's the Fed's cautious rate cuts or the BOJ's anticipated moves, there is plenty to watch and trade. If you found this analysis helpful, don't forget to give this video a like and subscribe to the XChief channel for more insights. And obviously, if you are ready to trade the asset that we have been covering in this video, don't forget that we'll leave you the link in the description to register at XChief. Thank you for watching, and see you in the next video.